The IRS has issued long-awaited guidance regarding inherited IRAs. Here are 5 key takeaways. Number 1, beginning in 2025, those who inherit an IRA must take an RMD beginning the year following the death of the original owner. If you inherited an IRA in 2021 or later, you don't have to make up distributions if you haven't taken them, but the RMDs must begin by 2025 and must be fully distributed by year 10. 2. The 10-year distribution rule, which now includes annual RMDs per the recent IRS guidance, is only for non-spouse beneficiaries, so children, siblings, friends, etc. The surviving spouse can continue to receive distributions from the inherited IRA account should she need to cover living expenses and if she's significantly younger, or she can roll the IRA over to a new account in her name and delay those RMDs until she turns 73, or she can simply begin taking distributions when the deceased would have started. 3. The final regulations only apply to non-spouse beneficiaries when the deceased was over the age of 73 and already taking those RMDs at the time of death. When the decedent is under the age of 73 at the time of passing, then the beneficiary inherits the IRA and they are allowed to take the money out at any time during the 10-year period, even waiting until year 10, according to the final rules. 4. While the IRS has clarified that RMDs must be taken from the inherited IRA, those distributions will not necessarily be spread out proportionally across the 10-year distribution window. So if you as a beneficiary take only your required distribution every year, the bulk of the account will still be largely intact after 10 years. Then in year 10, you may need to take a total distribution of the remaining balance, which could lead to a very much less than ideal tax hit. Consider the scenario where you're already earning a high income and then you wait until the 10th year to take that final distribution. And the combination of those factors, your high income with that added distribution, could result in a huge tax liability. 5, don't forget to take that RMD or you'll pay a penalty. The penalty for the missed RMD is 25% of that distribution amount. As we navigate these new IRS guidelines for inherited IRAs, it's clear that proactive planning is more crucial than ever. The complexities of the 10-year rule, annual RMDs, and potential tax implications underscore the importance of you staying informed and being proactive and strategic.